How do you finance your move in the middle of a pandemic? Well, 2020 has been a crazy year for many accounts, but life still happens to people. And we took the opportunity to catch up with Garth Chapman with Jencor Mortgage, a practiced professional within the mortgage finance industry. And he's going to help explain to us what you would need to know if you want to buy your first house this year, if you want to trade up from a smaller house to a bigger house to accommodate a growing family, or if you're contemplating downsizing from a larger house to a more affordable property. The mortgage rules have changed. Interest rates are very, very low right now, and there's a lot of things that you need to know if you're in the market to make a move this year. What did Garth have to say about it? Let's find out. Well, here we are. We are now months into this pandemic here in what's also a very challenging local economy here in Calgary. And for many real estate consumers that have been wanting to make a move within real estate, they've sort of pulled back a little bit, wanting to find out how the dust was kind of going to settle. And a key part of any large purchase like a real estate purchase is how are you going to put the money together. And so we're very fortunate to have Garth Chapman with Jencor Mortgage available to us here today. Garth, tell me a little bit about how the mortgage market has changed since the beginning of the pandemic through till now.
I think the first thing I want to say is to just remark on how adaptable humans are.
Right.
This is the biggest upside down turn of our world in 100 years or more. Nothing is the same, and yet we are almost living as though it were, with some new rules in place, masks, etc. Some people are completely unimpacted, others are seeing great opportunities and are being very active in several areas. If your income is unimpaired, if your employer or your own company, if you're self-employed, is doing well and is relatively unimpacted, nothing much has changed, other than lenders are rather more fussy about their due diligence and their underwriting processes, so there'll be more questions, perhaps a little more documentation proof. There will be, every lender now is making a phone call to confirm employment. After they've received all the documents and given an approval, they're going to make sure the job's still there and you're still working. So there are some things to address when your income at any point in this last 6 months has been impacted, whether you've been on CERB or EI, or you are self-employed and your business had a little trough and you're back up. You may have been laid off for a month and now you're back. So all of those things need to be understood by the broker or the bank and managed effectively. Ultimately, a mortgage broker's job is to understand the client, their needs, their situations really very well. That's the front end of the job, and then to package their desires up and present them to various lenders until you zoom in on the right one. And it's really important. Our job is like a tailor. We're going to outfit you in your best suit. Make sure you look great when we pitch you, and that's what we're experts at.
So just to provide a little bit of clarity on that, so you're a mortgage broker, right? You and your business would be about finding mortgage financing and helping buyers get qualified for an ideal mortgage product that allows them to make the move they want to make, right?
Exactly.
Now, do you work with only the big banks, or do you work with other lenders too? Or can you give our audience a bit of an understanding about whom it is that you might match them up with while you're trying to get them into the right financing package for them?
So just like people come in all shapes and sizes, colors, religions, avocations, etc. And lenders are equally varied. So we may deal with 50 different lenders. Somebody needs a private mortgage, somebody else needs a commercial mortgage, somebody else needs a 5% down CMHC insured mortgage, somebody else needs a net worth mortgage. They have no income, but lots of net worth. They're 60 years old and retired, And so there are all sorts of lenders to fit all those various different needs.
And then your job would be to know the criteria that these lenders will apply to any potential applicant, and then tailor your client and their mortgage application to the right fit with these lenders.
That's right.
Okay, very good. So let's say I am a first-time home buyer and I've been well employed throughout this tumultuous time. My hours might have moved around a little bit here and there, but I've got the down payment together and I would like to perhaps purchase a house this fall or winter. Has anything changed for a buyer that would find themselves in that situation in the midst of all the pandemic concerns that are out there right now?
Generally not, if they're properly understood and positioned. If they're complete in their providing of information, if the broker does a good job of digging around and making sure they understand everything. Lenders will, as I said, be a little more diligent in their follow-up, right. But essentially no, and as a result we're quite busy.
Yeah. What about rates? Have rates changed at all in the last few months, or what does that look like heading into the fall of 2020?
I got my first mortgage in about 1975. I've never seen rates this low.
Okay.
In my lifetime, they've not been this low.
Right. Yeah. Fantastic. Well, I mean, it shows that there's a silver lining to every gray cloud out there, right? And if a buyer is keen to make a move, they have the opportunity to do that. Okay. So
prices are down.
Yeah.
Interest rates are down.
Yeah.
And for those who are relatively confident in their prospects, there's a reason we're busy. Those people are buying. Yeah. They see those opportunities.
Right. Very good. So, Garth, within the real estate space and at our real estate brokerage, we will often find homeowners that come to us, and they're in a property right now that perhaps is not the ideal fit for them in a pandemic world and economy. They need more space, they would like less space, they would like more house, they would like less house. We're in a tough market right now, so on the real estate side, we're often challenged with extracting the best value for someone's property and at the same time finding the right fit for them to go and purchase something else. So how does it look for a consumer that wanted to trade up into a bigger house right now? You know, can you do that? Can you own two properties for a short period of time in this sort of post-pandemic space, or is there anything specific that you might want to impart on someone that's considering that?
A big part of my value add is relating exactly to that. So I will often, many times each year, and many times this year, do exactly what you've described. So the key to this whole thing is for a pre-approval, for most people isn't really a pre-approval. It's a thinly disguised rate hold. It's holding a ceiling rate for 3 or 4 months so you can go shop. You shop with your realtor and come back to your bank and sometimes a mortgage broker, I gotta say, and make the purchase and find that, oops, you don't qualify for quite that much, or there is an issue or a problem that hasn't been addressed. So my approach always is to do a full application, take all documents, and make sure that we have a real pre-approval that also has a rate hold in place, and that clients are properly positioned, that the realtor is properly informed as to what can be done, so that you're operating with clear, full knowledge as to what is possible, what is not possible, and it allows you to make those moves and make those decisions. So holding a property, we can often qualify people on the basis of the existing home being held as a rental.
Okay.
The client does not have to do that. There's no obligation to do it. But as far as the lenders are concerned, if you can carry it that way, they're fine.
They're okay.
And then you can decide to sell it or rent it. And sometimes people want to sell, are frustrated in the sale. Maybe their property is somewhat unique or at a price point where it's a tough place to sell right now. So they do end up keeping them as a rental.
Very good. So no reason to be scared off from looking at that then.
Not at all.
Every purchaser's circumstance is a bit unique, and a good mortgage broker can help find solutions for that type of circumstance. So that's a relief. Okay, now Garth, tell me a little bit about someone that might want to downsize. So someone is in a home right now, is perhaps a little uncertain about the income, the picture for them moving forward, and they want to make a prudent choice and own a little bit less house. What does that look like for someone that wants to make a move like that from a mortgage financing perspective?
Or they're like me, and I just downsized because at our age, we wanted a simpler life.
Yep.
And no more cutting grass or shoveling snow. So we've done exactly that.
Right.
And really, again, it's custom. Everything is custom. And there are many good reasons for doing those sorts of things, and they're not difficult. Now, the real key, again, is to dive into the client's current situation, have a good look at their existing mortgage. There are times where where it makes sense to port that mortgage.
Right.
Like you take a suitcase from one house to the other, you take the mortgage with you. There are times, and nowadays it is less likely that porting makes sense because the rates that the clients are holding, if they're fixed, are definitely higher than what they can get now. So often it's worth paying the penalty to save the money to go from here down to here in terms of a rate.
Right.
But if the rate is variable, it might well be a good one to port. And when they port, you can port and increase the mortgage if you're upsizing, or you can port and reduce the mortgage if you're downsizing.
Okay, very good. So you can move a large mortgage over and still reduce it and pay a bit off if you needed to maintain the right loan to value for the new property that you're going into. Very good.
We can, in the case of insured mortgages, so CMHC is the typical term for that. There actually are 3 insurers.
Yep.
CMHC made some cutbacks recently in their tolerances for debt service ratios, making it tougher for people to qualify. The other 2 insurers did not follow suit.
Okay.
So the impact on buyers dealing with experienced brokers has been negligent, negligible, I should say. So the CMHC insured mortgages, if you put less than 20% down, by federal law, it's mandated the mortgage must be insured.
Okay. Yeah.
When you make that move you just described, either up or down or sideways, you just want to be in a different neighborhood, same price point, not only can you port your mortgage, but we can port the CMHC premium that you paid, so you don't have to pay it again.
You don't have to pay it twice.
That's right.
Interesting.
And we can even port the CMHC premium without porting the mortgage.
Okay.
They're 2 separate pieces.
Yeah.
And they can be shuffled like that.
Interesting. That's a very interesting bit of insight. I didn't even know that. That's good. Thanks for sharing. Okay, Garth, so we've talked a little bit about first-time buyers, a little bit about people that own real estate already and want to make a move. Now, you know my passion in real estate, investing in real estate, and I know you're an avid investor in real estate yourself, so we'll dive into this on another video, but let's talk just for a little bit about what opportunities are out there for real estate investors right now that might want to take advantage of great pricing and a very strong rental market here in Calgary, and perhaps add an additional income stream to supplement their employment income or looking ahead to retirement. So from a real estate perspective, I know there's excellent opportunities out there right now, but rates have come down a little bit. You know, we're in the middle of a pandemic here again. Are lenders shying away from real estate investment right now, or are they in support of it if the rental income is there? Or what general advice might you have for someone contemplating investing in real estate right now?
Wow. Big subject. I am an investor, have been for nearly 20 years.
Yeah.
At one point we had 44 rental units.
Very good.
We're down to 10 because we've shrunk our life.
Yeah.
But that has funded our life. In effect, I do this work because I enjoy it.
Yes.
I really don't have to.
Right.
And that's a nice position to be in, and that's what real estate has done for me and my wife. Rates have come down more than a little.
Okay.
Some lenders, generally speaking, the big banks are all headquartered in Toronto, and they're nervous about Alberta and Saskatchewan, and they have pared back their limits. So they will lend on less numbers of properties than they used to. Some will want higher down payments, others not. So there's still lots of choice, especially in those first 4 5 properties that you purchase.
Okay.
Where you want to use up the monoline lenders and don't use the big banks because you're going to need them for later because they have an appetite for more than 5 or 6 properties, or 4 properties, I should say. Monolines are mandated. They can only go to 4 or 5, including the home. Prices are down. Prices are suppressed. There's lots of product available. There are some sweet spots, in my view, in Calgary, and you and I have talked about this over the previous couple of 3 years. The City of Calgary finally joined the 21st century and agreed to allow legal secondary suites.
Yeah, I knew you were going to say, that's right.
So garden suites, carriage suites, above the garage, basement suites. So they're being, by the hundreds, legalized. It's an easy process.
Great opportunity for anyone, have 2 dwelling units within the same property, 2 different income streams, can really add a lot of revenue, which can carry through to positive cash flow if you're financed the right way and if the property is well managed.
Exactly.
So before we dive into that, because you and I could talk for hours on investing in real estate, and I'm sure we will have an opportunity to do so, but I'm not hearing any red lights out there. I'm not hearing, put the brakes on if you're looking at this. So for a number of our clients for investment property, they're looking to turn their equity into income, and we've done a lot of work on that here in the past 2 years, trying to find good rental property for investors. And we have had some clients that have been apprehensive due to pandemic-related concerns and all of the kind of bad news that's out there. But from what I'm hearing from you is, if it's still a good property and still a good borrower, it's still game on for that approach if you were looking.
It is, and I would add a few things to that. And I have hundreds of investor clients in my book of business, and have had for many, many years. The number one complaint or problem that my investor clients have and complain about is property management issues. So if you're going to manage your properties yourself, become a professional, get educated, do it right. If you're going to hire, you need to get a really good property manager. It's hard to find good property management. You have an arm of your organization.
We do it here. Yes, we look after several hundred of them, and
you have an excellent reputation. But you're relatively unique, and there are not many of you out there. So that's a key issue.
Thank you for saying that.
The other is, we have 0 vacancy all through this pandemic. We had one tenant who asked for a tiny $300 payment deferral. He wanted to pay us $300 less in his basement suite, where he's paying us $1,000 a month, and pay it back over 3 months. So he didn't come to us with a problem and say, I'm broke. He came with a solution. But part of that is training. So we've trained our tenants well. Our average tenancy is 5 years in all our units. If you do a good job, it's a wonderful business. And you don't need to be living where you own. We spend half our year in Arizona, and we manage from there. The tenants don't know where we are.
You can do it if you've got the right system.
Absolutely. So again, buy the right property, buy good properties that are well understood. A realtor needs to be experienced. I do not recommend that buyers buy rental property from realtors who don't specialize in that, because there are things that they won't understand and recognize. If you're buying a property with a secondary suite, have good contractors. That's key. Good property management, as I said. And for people starting out, the best way to get ahead in real estate as a young couple or a young person is to buy a property with a suite, live in the suite, or live on the main floor and rent the other, and you're living nearly rent-free. You can do it at 5% down. You can do a duplex, you can do a duplex, live in one side, rent the other at 5% down. You can do a fourplex at 10% down, CMHC insured, live in one unit, rent the other 3. couple or 3 years later, you have a baby, you need a house, you move out, you keep that property and buy the next one. So it's a great way to start.
So many different ways to do this, and I'm very excited to get deeper on the subject of real estate investing with you and all of the different ways that you can use income property to generate wealth for yourself. So Garth, thank you very much for coming in and sharing your insight with all of us here today. We've got contact information for Garth down in the comments below. Thank you again, and we'll look very forward to our next video together. Thank you, Garth.
Thank you. Enjoyed it.